Welcome back, everybody. I hope your week was okay after coming back from the conference. If you did go, it was a lot of fun. I would recommend everybody to go next year and then just meet your community and your tribe. There were a lot of speakers that were very motivational and a lot of networking time, like 2 hours in between our networking time. And that's where you got to meet a lot of the people that actually we're a mix of the community and people that just follow Michael Stewart on YouTube. So it was great.
Yeah. Mikey, Renee, did you guys go?
I only watched the virtual event.
Okay.
Yeah, but it was great.
How did the virtual event go? Was that pretty good to be a part of?
Yeah, during the when they were networking, it was like playing this strange music in the background.
Mhm.
So I had to get used to that. But then once the speakers came back on, the audio was pretty clear.
Nice. Okay.
Yeah.
Mark, you enjoyed yourself?
Yeah, that was great. I didn't go the first year, but I agree with Lindsay. That was a good one. It
Yeah.
sounds like he's agreed to do it again next year. So I guess everybody can plan accordingly.
Yeah. Yeah, I think it's gonna only grow from here on out. Now that people are seeing it, he's got the streaming side of things, and once people attend, I think it's gonna only grow.
Yeah, it'd be interesting to see if he just capped it at 300 again and just see if he can sell it out.
Probably have to start looking at other venues.
Yeah, I mean, I like that 300 number. I think it
Mhm.
makes sense. Sometimes the events are just so big that you don't really, it's just overwhelms you. But
Yeah,
300, it's pretty good.
exactly. Yeah, you get your time to talk, and peep speakers get their time to get the questions answered, and yeah, it's not too many. That's good.
Yeah.
Well, awesome. Well, we want to check back in and see how everybody was doing, check in how things are going, and see if our typical weekly call, see if any wins, any losses, grow from there. Any questions? And
How many people went this year?
I don't know exactly how many.
Yeah, I think he didn't. Are you talking about the event?
Yeah, Vegas.
I think he turned off the ability to buy tickets about a week before. And I think at that time he had like 30 or 40 tickets remaining. So
Mm,
I don't think he hit the full 300, but it was still a really good event.
yeah, yeah. Well, cool. Lindsay, do you have anything? Start us off.
I mean,
Um,
you guys, I mean, just so I know maybe a little bit about everybody, can we go around the room and just explain where they live or where they invest, just so we've
Yeah,
got a reference point?
definitely. That's good. Yeah. Lindsay, you want to start?
yes, so I live in Los Angeles, very expensive. And I invest in Hammond and Gary, Indiana, along the signs of Millennial Mike.
And then I am Vincent. I live in Northern California, a little bit outside the Bay Area, in between Bay Area and Sacramento. I invest here locally for flips, and I invest my buy and hold long terms out of state in Montgomery, Alabama.
Mark Larson, I live in Salt Lake City. I have some rental properties here, maybe do some flips if I find one that makes sense, but I'm kind of focused on investing north of where Vincent is. I'm in Huntsville, Alabama. He's just a little bit further south, but I think Alabama's got some great potential.
Anybody next?
This would be
Oh, go ahead.
this would be Tash. I'm in Orange County. I got a house in Vegas. I got one in Detroit, Michigan. I got one in Monroe, North Carolina. I got one in Jackson, Mississippi that's being fixed up. And I have a few commercial properties in Detroit, Michigan that I'm working on. fixing up and renting out.
Awesome. I'd love to ask. I have questions about you for that. All those after we introduce everybody.
I'm Renee.
My name.
I'm from Minnesota, investing in Arizona. Just closed a subject to and put an offer in on another one. Hoping to hear back today of whether they accept the offer, but it's kind of a unlikely scenario that they will because they're top heavy.
Mm. Val, were you saying something?
Oh no, I was just gonna say yes. My name is Val Fears. I live in Winston-Salem, North Carolina. I got 3 properties here. I got one in Greensboro, and then looking to maybe start to and do some investing down there in Montgomery as well.
Oh yeah, you and I talked about
Yeah. Definitely want to jump on your coattails for sure. But
Come
I'm
on.
yeah, I got some. I'm trying to get this. I got this one here in Greensboro, man. That's it's horrible, but I bought it. I bought it with the guy in it, and so I've been back and forth with court, and so just as soon as I can get him out and get this thing turned, I'll be able to, get ready to make a move. So yeah. Yep. So yeah, just definitely, just like I said, just studying and just trying to learn everything I can before I jump out there. So
Perfect.
yep.
Mikey.
Yeah, and then I live in Hawaii and invest in Pittsburgh, hopping on the coattails of Mark, financial firefighter.
Nice. What part of Hawaii are you in?
Oahu.
Oh, nice. Okay.
Yeah.
And then, well, perfect. What I wanted to, is that everybody?
Maybe Anna wants to say something, and I know Michael just joined.
Sure. Yeah, I'm Anna Kay. I live in Washington, investing in 3 single-family homes in Florence, Alabama, west of Huntsville. I just got a notice from the PM that they initiated an eviction. That's going to be my first eviction in one of the houses in Florence. Today is the 7th day that they gave an eviction notice. So I will catch up and see what's going on with the PM probably Monday next week.
Awesome. Mr. Michael, good morning, sir.
What's up, guys? Good morning. I promised you I'd show up for a little bit. I got another call coming up, but
You're all good.
wanted to stop by and say hi, especially after the event.
Yeah.
I didn't see you there, I don't think.
Yeah, I didn't get the opportunity to come by, but yeah, I appreciate you coming on the call and introducing yourself. And if you only got a little bit of time, do you want to just start off?
Yeah, sure. I'll introduce myself. So, hey guys, Michael Manatskanyan. I'm a real estate investor. Bought my first property in 2020. I was actually also listening to, kind of the YouTube guys. There was the Meet Kevins, the Graham Steffens, and Zuber. He was very different in the mix in regards to, I don't know when I first started listening to Zuber, but I remember when I first subscribed, he had under 5,000, but he was providing like non-stop value, and the fundamentals of real estate investing that he shares are so key. You got to do the work, you got to know your numbers, you got to know your buy box. Stuff happens sometimes, you got to learn from it, like all that good stuff. It's, even though I invest very differently than, the one rental at a time, to me, primarily, I mean, I guess you guys do everything, but the fundamentals that Zuber has taught and shared for a very long time very much resonate with me. And then I also have my own community where I do the same thing, but it's more for like advanced investing. So like the majority of the deals that I've bought, I own over 60 rentals worth around 22 million. I only started a couple years ago, so it's not like this was this lifelong trajectory. It's very possible to scale efficiently. But I pretty much acquire my properties leveraging creative financing. My number one skill set is like really in-depth deal analysis, and whether it's creative, traditional, really just understanding like what is the best way to acquire a deal, best way to manage and operate that property to maximize cash flow. And then I do, so creative financing, deal analysis. I primarily raise money. So the majority of my portfolio, actually almost the entirety of my portfolio, I've bought using none of my own money, between house hacking, leveraging the seller's capital, and then working with private money partners and lenders. And then I've done all types of management strategies, long-term, midterm, and short-term. And then I also do a ton of co-living or like rent by the room. It just, to me, makes a ton of financial sense, and we provide a way better solution to the marketplace, affordable housing, to people who have unfortunately been priced out of the communities that they work and serve in, can no longer live there. So we've started with taking a short-term rental and converting it to co-living. And then just once we saw the instant results and how much more appreciative our tenants were, like our new tenants, or the pad split platform, they call them members. But just that compared to my short-term rental guests, we kind of went all in and have been doing a lot of that. And then it's almost entirely what I'll be doing moving forward. So
Yeah, awesome.
capital raising, co-living.
Cool. And where are you located, and where do you invest in for that property?
Yeah, definitely. So I live in Monterey, California, or like Northern California now. I used to live in San Diego up until recently, and then I started investing while I was in Alaska. I was military, so I was every couple of years I was moving, and then got out, went to San Diego, moved up here to Monterey to be closer to family with our baby. And then I started investing in Alaska, then San Diego. Those are my local markets. And I got very comfortable branching out of that and now own in like a dozen 10 states and roughly a dozen markets, with most of it in the Southeast, especially the co-living. So North Carolina, South Carolina, Georgia, Tennessee, Florida. I also own in Montana, Arizona, California, Washington, and then Alaska.
Nice. Okay.
Yeah. I think that's it.
Yeah.
But it all started with one rental at a time, right? Like,
yeah, exactly.
you don't get to 60 without my first duplex house hack. So and then after that was a fourplex house hack. And I really, it just depends on who I'm talking to, but like those first few are probably more important to my entire journey than the last several, but that's just how the growth is. It's
exactly
not linear. It's like actually like flat. And it took me 18 months of just analyzing deals to have the confidence to even just buy my first one. And it was give myself an ultimatum. Like I'm just pretending to be a real estate investor. Do you guys analyze deals in this community?
Oh yeah, for sure. Yeah.
So like, how long does it take you on average to analyze deals?
Ooh, that all depends. I'm doing a portfolio right now and it's been 2 days. So
well, yeah. So like on average, we'll say like 20, 30 minutes. Let's say 30 minutes.
Yeah.
I did hundreds of these.
Yeah.
And then I realized 18 months into my journey, this is really cool. I'm really good at analyzing deals, but I have no more cash flow or real estate to show for it. And I met with meetups and realized these guys have real estate, and they're definitely not analyzing as extensively or as much as I am, but they're the real estate. They're the ones actually becoming financially free. So, and how do I do that? So I gave myself that ultimatum that if I wanted to actually be a real estate investor, I had to stop playing real estate investor. I had to actually do it, or just save my time and go do other fun things. And that first thing, that first hurdle in that ultimatum I gave myself was the starting block, like just doing the work, but like doing the work in the stages, right? I couldn't own real estate without making offers. And so just a step at a time. Without that, nothing else even matters. So that first one was the most important for me. For a lot of people in here that are newer in their journey, if you or maybe some of you guys are scaling too. Oh, Renee messaged me about subject 2 earlier.
I want to respect your time, Mike. How much longer you got?
No, I got I'm gonna probably hop off in 10 minutes. So you feel free to continue.
You guys have any questions for Mike while we got him?
Oh. Yeah, that's totally cool too. What is the normal like cadence here? You guys just hang out, Q&A?
Yeah. So Lindsay and I, we host every Friday morning. We'll come on, we'll just talk about wins, losses from our week. We were just briefing about Zuber's event for this one, since it's the first one after. We'll go over, like I said, any wins or losses. Anybody have any questions? Today I'm going to actually do kind of a deal review of a cash or a burr that I just finished. We could talk about that. I like to share numbers and show all that and show that there is still cash flow out there. And then Lindsay's got a lot too. She provides a lot of things that she has going on, and yeah.
Oh, awesome. Okay, yeah, like I don't want to mean to hijack at all.
No, you're good.
If you guys want questions, I'm happy to answer. Creative finance, capital raising, deal analysis. I mean, I do traditional investing. I do it all, but for me, it's like arbitrage. It's like efficiently. So if I can buy deals at 3% interest rate versus 7%, I'm making more cash flow and I'm paying my debts down faster. If I can do co-living and make an extra $1,000 a month in long term, I just like constantly like, how can I arbitrage? How can I increase my profit on every deal? Because I did not want. I mean, I own a bunch of properties now, but I didn't want to own a ton of real estate. I just wanted them to make as much money as they can. So I don't care about owning real estate per se. It's not like the number of units. I care about like, what is it doing for me, which is yeah, the passive income, passive,
Exactly.
semi-passive income. I mean, I can't really call it passive income, but
Yeah. I don't think it's ever truly, really passive, but yeah, you can get close to it.
Mark, so
But
do
yeah,
you have a
what did you
question,
got
Mark?
anything or any questions for Michael?
I had a question. Do you, I'm guessing you involve property management on all of your properties?
That was the biggest shift that I had around 2.5 years ago when I met my mentor, Pace Morby. And it wasn't like, this has nothing to do with you talk to Pace, but at that point, I wanted to retire at $7,500 a month cash flow because I didn't want to buy any more real estate. And he identified very quickly the reason was because I created a business that I hated operating, which was I was managing my own properties, doing my own renovations, all of that, doing all my own bookkeeping. So when he really opened my eyes to you can do things that are more enjoyable, and then you'll want to scale, which for me is finding deals, structuring them, and offload the things that you don't want to, especially when you're analyzing them on a spreadsheet. Like I was analyzing for property management, I just wasn't using them to maximize my cash flow. But the opportunity cost of paying them 10% of my rental income was, first of all, draining me, and then secondarily was it made me not want to grow anymore. And then I could just spend that time doing. So all that to be said, like one of the biggest breakthroughs I had through like mentorship was I needed to offload things I didn't care about, which I'm not a huge property management guy. It was not something I enjoyed doing at all whatsoever. So yes, I use property management, but for the first 2 years, I was self-managing. And then I realized that is why I didn't want to continue growing and scaling. Once I offloaded that and the bookkeeping and things like that, I was able to scale. But yes, property management. And then as I continue to scale my portfolio, continue to leverage property management, eventually I was paying tens of thousands of dollars, no less than $10,000 a month to property management all over. So then I hired a full-time asset manager and then hired some property management, like administrative people underneath her to help with like the guest communications and all that. Thankfully, it's fairly straightforward and easy over time if like someone's dedicated to it, like the guest communications and the management of the properties, because there's literally people, because I primarily buy in primary markets, there's people like investors and whatever all over the place that I can always tap into for resources. You know, hey, we need a handyman, we need a cleaner, we need this, we need that. Like it's all done very easily in-house, and then it's like very standardized for me. But it went from hating my real estate portfolio by being the property manager to outsourcing property management until it cost way too much. It was inconsistent because I was in all these different markets with different property managers. To then bringing it in-house when it made a lot of financial sense. And that's been a massive blessing too. Like in those 3 phases, because I don't know where you're at in your journey, but that's kind of was my progression of it. I think the smart people just skip my first phase and just start with property management right away.
Yeah.
There's value to it, to like learning that piece. But it's also like, it's not the best use of a real estate investor's time, especially if you, like me, had a, military and then government, like a job, it's like definitely not the best use of your time when it. Does that help, Mark, or do you want me to?
That's great. So you don't have boots on the ground in each of those states. You have an asset manager that kind of looks for the handyman or looks for the contractor.
Yeah, like my boots on the ground are not a property management company. Like I guess people think traditionally because except for Alaska. Alaska is the one because that's where I started investing. Like that's a very unique, and it's Fairbanks, Alaska, so it's smaller population, less like resources available. So like that one I have property managed. Everything else is my asset manager. She manages them with some VAs and like our property management team. The boots on the ground, I think I have better boots on the ground than property management companies. I could send a cleaner anytime I want. I can send a handyman anytime I want. Like they're doing a 2-for-1 for me. They're gonna go fix something and then tell me how everything is looking. And they care way more because I'm paying them per service as opposed to property management who just get very comfortable just collecting rent check and not doing a lot for it. No offense to property management, but like I think I get better results with better boots on the ground by sending really good cleaners and handymen and even other investors if they want to, hey, do you mind taking a photo at this property for me? Like people go take photos or whatever. I think I get better boots on the ground than typical property management, even though we are not physically located. I mean, I'm in California. My asset manager has moved from Florida to Puerto Rico. We have a property there, a 7-unit. She's moved over there. And I think we have better boots on the ground, even though we have no property management boots on the ground. But I'm biased, right? I'm doing it, so I gotta. I like it. Otherwise, I gotta switch it up.
I think that's huge. You said, you know, you're going to grow with outsourcing the things that on your day to day that you're not fan of, you're not good at, things like that. And I started last year doing that, of just bringing in more people to the team. Because I don't like bookkeeping. I hate that. I don't like QuickBooks. I don't like any of those program softwares, writing my rehabs down, any of that. So yeah, that's good. You can grow quicker by, you know, hiring out.
And that was the thing. Like, it took me 18 months to buy my first deal, and then roughly a year and a half after that to even realize that, because I had someone who was ahead of me. And that's why I say pace. Like, you don't need pace to tell you that, but it's usually easier when you're in it, when you're in the thick of it, it's so hard to realize, like, oh, this is why. But then someone who's like a few steps ahead says, oh yeah, that's what I did. Or like, that's what I recommend. Like, it seems like for them, it's so obvious what you need to do, because like they've already gone through that phase. And so that's why I highlight that. Like, for him, it was like, oh dude, you just created a business that you hate, and you're making $2,500 a month by saving this on bookkeeping and property management. You just outsource that. Imagine what you could do with all that time. Really enjoys deals and raising money. Just go do more of that. And I was like, duh. Like, I would enjoy to do more of that and way less of all this crap. Like, I'm not the actually, I was talking to Lumberjack Landlord too. I might hire him or leverage his services or whatever to help go through my overall asset management and like the operations side, because it seems like he really focuses on trying to optimize that a lot. Because that's something like I like growth. I like the front end. The operations, you can buy deals and raise all the money you want. You don't make anything unless you're operating successfully. But then I know if I'm not as into it, I need to have someone that is really into it. And that's my operations manager and the team around that. And then even leveraging other investors. So that's like a big thing right there. Like, asking for help was like a big part of my the property management piece. So I'm like all over the place because I didn't know what to expect coming in today.
So you say you're in 10 states. How do you pick a state? How are you finding the deal? Like, kind of go through each one. What you know brings you to that state? What attracts you? And you kind of go from there. Elaborate on that a little bit.
So the first two were out of my local market, Alaska, Fairbanks, Alaska, and then San Diego, which was funny because they could not be any more polar opposites. So like, I had to shift massively my mindset on cash flow versus all the ownership benefits when I started accounting for like, so I won't get into the weeds of that. My local markets is why, but it really depends. I mean, I guess it is good because some of you are focused on cash flow to be financially free, and then others of you are focused on the ownership benefits to become really wealthy, or a combination of the two. And I prefer something in the middle, although I started off on both extremes between my two markets. I was able to make my San Diego property cash flow neutral, at least starting off, by renting them out as furnished midterm rentals. But when I really did the math and realized I make 5 times the ownership benefits that I do in cash flow in any given year, this is really where the wealth is built. When Zuber talks about like, give yourself a 5-10 year window at least to really get good results. I haven't even hit 5 years yet. Like, and that it all starts compounding more and more because like the debt gets paid down, properties continue to appreciate, and that's compounding. So like, identifying what your primary focus is: cash flow to become financially free, ownership benefits to become wealthy, or the mix. So primarily what I do now is the mix, somewhere in the middle, which is kind of where those Southeast markets are. I pretty much avoid the super cash flow markets because it's not necessary for me at this point, and I'm able to get a lot of cash flow through more advanced management strategies. So then for me, because I primarily buy my deals from wholesalers, I have to go where wholesalers have deals, and where like creative wholesalers, and where I think is a good blend of cash flow and appreciation. Because of co-living, I can generate $1,000 to $2,000 a month on any given property. Not every property, but a property. Not everyone, but certain properties. And then I could buy them in better markets, better locations. I kind of get the best of both worlds. I get the Alabama or Louisiana cash flow with the appreciation of Atlanta or Charlotte or Florida markets or whatever. So for me, because that was another thing that I learned. As I continued, like, once pace opened my eyes to stop doing the things that don't make sense for you, or like, I realized I don't like to spend time, money, and energy pulling a list, skip tracing it, cold calling, or having a VA cold call. Then I do the follow-up, talk to them 12 times, and then potentially maybe get a deal, and then go through the whole process. I'd rather just buy deals like kind of we do on the MLS, I guess, for on-market properties or from wholesalers for creative deals. And then my job is then to, at any time of the day, whether it's 2 a.m. or wherever I want, from anywhere in the world, I can just analyze those deals and see which one do I want to buy, because I'm really good at analyzing deals and finding the potential in them. I'm able to just buy deals consistently from wholesalers that even others might overlook and then generate really solid returns. So for me, it's a combination of things like knowing what do I want, cash flow and appreciation, not one extreme or the other. It just depends on everyone's individual goal. And then identifying, well, if I'm getting deals this way, the more deals that are in those areas, the easier it is for me to analyze and determine which ones are good deals. So it's a combination of where are the deals coming from, what are my overall goals, and then yeah, because I do co-living, so it's like ideally leveraging my main platform that I use is Pad Split. So like they already give you a bunch of data on their top markets. So it's like that's how I've dwindled it down to kind of where I'm at now and what I'll continue to focus on. First, it used to just be convenience of great deals wherever they were. And then like my Washington and Montana ones, like those were great at the time, but they don't fit in my longer term goals. So so that's why I'm consolidating more and more to the Southeast, and then San Diego every 10 properties, I buy another one in San Diego for like that real good long-term play.
Awesome. I love that.
And like, if I was someone else starting out, I wouldn't do what I do. I like built to where I'm at. Like I started one market at a time, because it's really hard to know if something's going to work or to be able to quickly analyze a deal if you do not have an understanding of the market, your buy box, analyzing deals consistently, like none of that stuff. Like that's why it's so fundamental to do a lot of the stuff Zubert talks about, like building foundation and understanding your numbers. Because now I can look at these markets and say, oh yeah, quickly I know that PITI is too high or not for this type of management strategy in this market based on the house size. But I didn't start there, right? It's like one market at a time is how I got it.
I think that's good, because a lot of us are in one or two markets, and then we'll spend that analysis paralysis, like interested in another market or another city, but we'll have that analysis paralysis and analyze for months and months, and then get scared and not pull the trigger. But that's cool to see that you're in so many different ones.
And like it is more advanced, right? To do more, but at the same time, I realized like I didn't know anything about any market that I was going out to in general. So like it's very easy. I feel like I can truly understand a market, not the nitty gritty of a market, but I can understand the overall metrics of a market more easily than even someone who lives there. Like a lot of people think, oh, because I live there, I know everything about the market. Actually, I have like a biased view of that market. I'll go on, and I think I have a free training. I don't want to plug anything, but I also have a free school community. And I think I have a free training on this, like how to quickly analyze a market using like citydata.com. And I think we might talk about that as well, but just like getting the economic indicators and all that stuff, and then verifying, like for me, because I'm really focused on co-living, that also really helps. Like, where are we seeing great data for co-living properties? And then following those markets as well, like incorporating the ones that hit my overall goals and that work well for that co-living model or in those pad split markets.
For sure.
But yeah, there's like a lot of tools online to look up markets.
Yeah.
I realized after a while, just because I lived in San Diego doesn't mean I knew everything about San Diego. So like in Alaska, maybe because it was smaller, but I think people think it's easier to do local. I think in theory it is, but it also builds it can build really bad business practices for you, because you might, oh, I can go to that property, I can do that renovation, so you're not building a business, you're just building yourself a job that you're probably not going to want to do unless you eventually transition out of that. But that's a hard thing to do when it's local. But I understand everyone's different, so I can't say it's a risk tolerance thing too.
Yeah.
Like I know that when I'm buying a property, I got an inspector there. I got like all these people that I don't know. They know better than I do anyway. I can go to the house. I don't know what they know. They know way better than I do. If I need to send a contractor, they know better than I do. And it's like getting good referrals is the big one. That's the biggest risk out of state or in new markets. You need referrals from real estate investors is the best way to get to know who's a great fit, or like who's a great person to work with, right? And I think that was number one. It's like I don't need to know who to directly contact. I need to know who has used people successfully in that market, because that's when you really get messed up, especially like contractors doing big renovations in markets that you're unfamiliar with and you have little to no resources. That's how you can easily get screwed. And it's not that I haven't, I've I've got such a big portfolio now, it's diversified well that it's the risk is minimized, right? If it's like your one deal and it's all your own money, like it becomes a lot harder, you know, if it's all in on that. But that's why it's really important to get really great referrals and like stay on top of it and then scale systematically until it almost becomes exponential. Like get a property, do everything, do all the good due diligence, go super hard on that, renovate it, or you know, close on it, renovate it. If you're gonna furnish it, rent it out, stabilize it, and then worry about the next one. Like I don't recommend the way that I do deals to the majority of people, but like we've gotten to that point now that we can do multiple projects at one time. Even me, I don't like to do more than 2 at any one time. Like I don't like to buy more than 2 properties in 1 month. I bought more than that in 1 month, and I don't like that. Like it's stretching my team too thin. And then I don't even want to hire a bigger team. That's the thing. Like I know where I want to be at. I'm not trying to be the biggest, best real estate investor in the world.
Anna has a question for you, Michael.
Yeah, please.
Sorry to bug. Well, where about in Washington do you have a property, and are you trying to sell it, or
I have
it didn't work out in Washington, or?
No, it's a sick deal. It's just my one property in Washington. It's Spokane, Washington, 2.25% interest rate. It's a very successful short-term rental. Great property. It's my one property there. I don't really want to think about there when I can think about all my other markets. That's really what it is.
Okay. All right. Thanks.
Yeah, of
Very
course.
interesting.
Yeah, Spokane is like, even when I try to operate in markets in which the government wants me to operate in outside of California, like if the government makes it harder for me to be a landlord, I don't really want to be a landlord and invest my time, money, and energy in that market necessarily. So even Washington is like, well, I'm gonna go to Spokane where it's much more of a rental market. The conditions are better to be a landlord. That's my thought. There's too many places that make it easy enough to be a good investor. I don't want the places that make it as hard as possible to be an investor, I guess.
Yep.
So even Washington was like Spokane. That's it. I don't want, there's like Yakima or whatever. There's somewhere else that I was considering, but it was a portfolio of duplexes. Cool.
You're done.
Sorry, no, go for it. I'll just text someone that I'll just need another team.
The
I know I
concept
came
of
in like a freaking tornado and then I'm out.
the concept of an asset manager is a new concept for me. How do one goes about hiring somebody? What qualifications do you look at when hiring or looking for an asset manager?
Yeah, that's a great question. So I'm like the worst. Well, I've talked to like when I was in Vegas, I was talking to Brian Davila and Ryan Pineda, and I hire very wrong in their opinion. I hire like top down or like sideways. I hire people that can grow into this role where they're just like, let me just go find someone. Let's go find a 6-figure all-star to bring into the business who will just tell me what needs to get done. I probably didn't do it the best way, but it was the most financially convenient way at the time. So for me, what I was looking for was someone who had either corporate experience with overseeing renovations, getting bids, and then I knew the other things that I needed to do would be very like to get insurance quotes and all that. Like you can oversee a construction project and you've done it. She did it like globally. She worked for a big corporation before. So for me, even though she had little real estate experience, she had a lot of good renovation and overseeing like rehab projects. And that was my main goal. And then I've kind of helped her grow into more of that, additionally like overseeing property management and then just like general operations. Like if you have that good corporate experience, if you got tasks to do, like, can you do the tasks that you have to do? For me, it was, I don't like to oversee renovations. Is that something you're good at? So for me, it was, what are the parts of my business that need to get done? And then which parts do I do the best on? And then which ones do I not want to do any more of? And that's kind of how I think asset manager is probably a loose term for it. It's like, she does a lot of the operations that I don't. She's probably more like an operations manager technically, but she oversees our properties. And so it's like, what are the operational pieces? Once I get a great deal and put it under contract, what after that is it that I don't want to be part of, or I just want to oversee but not actively do, that she can do? And then it grew into more of the property management over time as well, as we decided financially it made more sense to bring it in-house. So what I mean to say is like, it's not like I had an asset manager who's managed hundreds of rental properties or something like that. She didn't even own a property. Her first ownership came through me giving her equity in some of our deals. And in addition to paying her. But like, there's 2 schools of thought, right? Hire really great talent from the top down and they'll tell you what to do. And I'm kind of at that place now with the COO, like hiring a COO who's like I tried hiring sideways and I was like, I don't even know what to train a COO to do. I'm just gonna hire a really good COO who's got experience in this space to come into my business. But for me at the time with the asset manager, it made more sense to just understand. I don't know if you guys have read Buy Back Your Time. I'm not very good at like doing a lot of stuff Dan Martell teaches, but like at a certain point, you kind of know what your business looks like because you're doing these things. Which of those things are like in your zone of genius and which ones are not? And that's what I would focus on outsourcing and then making sure like you're bringing someone who's got good skills for that. And, you know, we've been together for a year and 3 months now, and it's been a massive learning curve and changing the role and all that. But that's really what it stems down to is like, what am I really good at and what am I not really good at? And then what can I hire someone to do like service based? And then what can I I can hire, at the time I could hire property management, I could hire transaction coordination, I can hire an inspector, I can hire, but like to oversee my rehabs, well, we need someone in-house focused on that. That was a big one. To set up my property furnishings, I can hire that, but it actually made more sense to do that in-house. So she had kind of that interior design and renovation management, and she did it like internationally as well. So that made a lot of sense. And because I had a good vision and all that, we had buy-in even at low pay in the beginning to then grow into more of this role over time. Was that helpful or was that, I don't mean to be ambiguous. I'm trying to be very direct in it. I'm still figuring this stuff out too. It's just, this is what it looked like for me in my journey.
It seems like you need somebody very flexible, very knowledgeable in a lot of different rehabilitation space. But you also need somebody that's gonna come up with like their own agenda per se. Like they're gonna grow into the role and they're gonna see where the problems are and what the solutions are gonna be called for, and she's gonna involve you.
And that's why social media and sharing your story is really good, especially you guys in this community, right? You guys are sharing at least with each other what you're doing. And that's what I did with the sub 2 community that, you know, I've primarily spent a lot of my time and energy in sharing it and then aligning with people with similar visions and say like, hey, do you want to grow this thing together? Obviously I have this role and you're going to have this role, but growing that way. Cause for me it was, yes, the skill set, a lot of it can be taught. I mean, the renovation stuff, I wouldn't even know how to teach that as well. But like a lot of it can be taught and grown through over time, but it's like that commitment for the long term. Like we want to do this thing. That was the big one. Like once we knew we were on the same page for that, we had a shared long-term vision. Everything else was kind of like, we figured it out. If that helps.
That's awesome. That's really good information.
I can come in and like block off like an hour and do whatever. Next time I can talk to Zuber. We're going to do one more call at least coming up on at least co-living, I think. So we'll come in and do that at some point if you guys want to talk about that. I can even bring my asset manager in because she's the one who oversees the renovations, gets the bids, orders the materials for the property, furnishes the property, and then sets them up to be rented out on pad split. So
yeah, you can connect with either me or Lindsay, Michael, and we can pick out a day and you just run the show.
Yeah.
Cool.
Unfortunately, I think I accidentally did and I didn't mean to.
No, you're good. No, you're fine. This is good information. Very valuable.
Thank you guys. Yeah, if you want to reach out, I'm on school, so you can reach out to me there. Instagram's really awesome way to stay connected. And I do a live weekly Q&A on my YouTube. So if you guys have questions, some of you guys have reached out about questions. I would love to answer all questions in real time, but it's really hard. Send me your questions and then I'll answer them during the live weekly Q&As or show up and I can answer them during those. And I don't know everything, but I have no problem trying to answer everything in real time if I do know the answer. So
for sure.
Cool, guys.
Is that your YouTube channel, Michael M. Nat?
So that's my Instagram. And then in there, in my link tree, there's everything. It's superinvestors_REI is my YouTube, but it's, if you go to Michael MNAT on Instagram, all my links are in my bio. And I have like free creative finance calculators and things like that too. If you guys want to, if you need that, all in my YouTube descriptions.
Thank you, Michael.
Thank you for your time, sir. Appreciate you coming on.
Appreciate you guys as well. Thanks for reaching out, Vincent. I'll see you guys in a future one.
Yes, sir.
Nice meeting you guys. Bye.
That was good.
Yeah.
Good information you shared.
I feel like I was listening to him on 1.5 speed. I was like,
yeah.
Catch up.
Fast talker, yeah. Perfect. Well, we were doing our introduction still. I think everybody went.
I think so. I think Vincent, you said you wanted to share a deal. Is anybody interested in that?
Yeah, if everybody wants, I can. I just finished a burr actually day before Zuber's event. I could go over just to kind of show some of my numbers and what everything looked like, and to show that there is still cash flow out here and burrs are still a thing. Everybody okay with that? Perfect. Okay. I didn't prepare anything to share, but what I can do is show you. I should have had this ready for you guys.
Did you get the keys to Woodland?
That's a funny story.
Oh,
I'll touch on that one a little after. After this, I'll talk about that one a little bit. It's good stuff, but it's just crazy. Okay, so I will share. So May of 2024, I sent out a mailing list of about 2,100 prospective homes that I built a list for. About 3/4 went to Montgomery, Alabama. The rest, the fourth quarter went to local, my local market, basically. So my mailers come as pressure sealed check letters. It'll have the name, the number, the trust, the LLC, whoever is the name, my offer number, which is usually 70% of the ARV. So my mailer program that I use will have a value, and then they'll send that check letter at whatever 70% comes down to. So when you send a mass letters out, you don't exactly see until your mailing list gets sent out. So and processed. So when you get a person calling in, and I average about 10 calls for every 1,000. That's kind of the average number at 70%. I like the mailers because it's inbound. That shows that they may not like your number, but they're at least interested in an offer or interested in selling or something's going on. So that brings easier conversations than just a cold call, VA outreach, whatever. That just brings easier conversations. So I got a call. I was actually at Chick-fil-A with my kids, and I don't like, my favorite thing is not taking calls while I'm out on the go, but sometimes it's speed to lead.
All right. Good morning, everyone. Hope everyone's recovered.
Sometimes it's speed to lead. So I'm dealing with the call, put my AirPods in, dealing with the call. And it's a lady out in Santa Rosa, which is, if anybody knows this area, that's kind of in the valley out here. It's really close to me, but she owns in Montgomery, Alabama. So I like to target out-of-state tired landlords in Montgomery, Alabama, meaning they own in Montgomery, Alabama, but they do not live there. So a lot of those people don't have the team that I have. A lot of those people don't have the knowledge, experience. They just bought one because it was cheap and usually want to get rid of one or two of them. That's the luck and success I found. So she calls me. She tells me she's dealing with having tenant issues. Can't get a hold of her tenant. They haven't paid in 3 months. I'm like, great. So I get the address. We start doing our get home, do my due diligence, do my research on the property. Gave her a call back. Learned a little bit more. She told me that they renovated the property already. They're just having tenant issues. They live here in California and just don't have the time or need or want to deal with the tenant issue. So, we do our negotiating, talk about the house. I get a couple pictures of their renovation, and she hasn't talked to the tenant in 3 months. Has no idea, hasn't received rent, no context, nothing, hasn't even talked to him. So we start talking. We end up coming to agreement. She wanted 84,000 for the house. We negotiated down to 65,000. So in the with my calculations and my analyzing, I saw the house should appraise for around 120, 125 with my thought process, looking at what's sold in the area and running comps. So I thought 65 grand was a great deal. Got it for 50% off. Now I just have to deal with the tenant. So to speed things up, closing the house for 65 grand, everything went great. So now it's my house. So now I need to get in contact with the tenant. Well, lucky for me, first phone call to the tenant, she answered, and I got a hold of her. And I'm like, hey, what's going on? I'm the new owner of the house. One, she didn't believe me, but it was a really weird transition of I now own this house. You're not dealing with the old seller anymore. Tell me what's going on. Let me learn your story. Let me see what we can do. She ended up being awesome and great at first. So I'm like, cool, well, let's get you on a new lease since you're month to month now. Come to find out, her husband got shot at work and died 3 months prior to that. So she had no contacts for the old seller. I'm sure she could have found it somehow, but she was just like, I can't get a hold of her. I didn't know where she is, who she is. Probably could have been found with a lease, I feel like, but whatever. That's here nor there. So we agreed on a price. I told her that I needed to get in the property to see how it looks, because I'm buying it sight unseen at this point. But I knew it was a good deal at 50 cents on the dollar. So I finally get my contractor in. Really not much we need to do. Everything looks pretty good. I actually flew out there, not for this house. I was going out there for some other things, but I went out there and I actually walked the property, met the tenant, everything. Everything looked great. It was just, everything was happening and working out well. Well, she didn't end up paying or we didn't sign a lease, but she did not end up paying her. I needed a new deposit and rent. She didn't end up paying, started giving me excuses. So I was like, okay, this is a sign. So now we need to get her out. So we ended up, after some back and forth, some very hostile back and forths, we ended up doing a 30-day notice to vacate. State of Alabama is incredible if you need to get a tenant out. Like, it was, the landlord is going to win out of this. She's already had a prior eviction. I kept pitching to her that you don't want another one. Nobody's ever going to rent to you. Let's just figure this out. We agreed on a cash for keys, so I gave her $1,000 to just leave. So I gave her a date. She signed paperwork. We gave her $1,000 cash. Told her she signed that she could never touch this property, never even come to this property ever again. Went on to the next chapter of her life. So at this point, I'm in the house. I bought this house. Oh, sorry. So going back, I bought this house with private money. So I have a private money lender in Montgomery, Alabama, who will fund the purchase price only. So he fronts the 65 grand up front at 12% interest only, 0 points. So now I'm paying 12% interest on that every month. And at this time, I was in it about 2 months. So I'm in the house, whatever my interest payment was, those 2 months, and then $1,000. So then we get in the property, we start fixing it up, little things here and there, nothing major, no major kitchens. We did have to redo the bathroom because there's foundation issues. So that was about $3,000. Other than that, in the house, we put new flooring in. That was around $5 grand there. So I'm in the house now about $9,000. Some other little odds and ends, we'll call that about 2,000. So in the house about 11,000. So we're at 65 plus 11, so we 76 grand plus my interest payments. So now it's time to take it to the bank. So I go to my lender and I say, hey, I have this, paid off house. I'm looking to refinance, put long-term debt on the property. So we go and I just got a house appraised for $115,000. So a little under than what I wanted. Appraisers, I hope nobody's an appraiser, but appraisers are just the worst. Like I don't know why they feel like it's their money, but just give me a good value. So they appraised at $115,000. I got 75% of that. So that was $86,250. So I'm in the house around 76 roughly, and then they're gonna refi out 86,250. I'm sorry, it was 125, not 115. So it was like 96. Sorry, I apologize. So I'm in the house about that 76 grand. And then it was about, I got a cash out refi of around 94 to 96. Take out the lender fees from that. And we ended up making 10 grand on the house, tax free, just to move on to the next project. So essentially it's a free house. My rent payment on that is my mortgage payment on that is $7. I'm sorry, I should have this ready for you guys. $652 is my mortgage payment on that, and I'm renting the house out for $1,350, leased and deposit in. So there is still cash flow. There is still burrs that can happen, and I attribute this deal to fixing a problem rather than finding a good deal. So the seller just, you're helping people out rather than making your numbers work, right? So she couldn't deal with the tenant. She didn't have the time. She didn't know what to do, the team, anything like that. But I was able to come in at the right time and just fix her issue. So it wasn't risky, very much so, because the tenant could have completely trashed the house. It could have been a trashed house. Who knows what we could have did, but it was just building that relationship. And it did end semi bad, but she got her money, she left, she didn't mess the house up, and it could have ended worse. But so yeah, that's 652 is my mortgage. And yeah, that's my PITI. And then at 1350 I rent. There's still, what is that? We'll call it with reserves, almost $500 or so of cash flow for a free house. So that's the power of real estate, and two, the power of building connections.
Awesome. Any questions for Vincent? That was a great deal, Vincent.
Yeah,
Thank you.
I have a
Appreciate that.
question. Yeah,
Yes.
Vincent, this is great. Targeting a tired landlord
Mhm.
who is remote investing in your area. I never thought
Yes.
about that. Hey, I have a question. So this lady who was tired of, she was attempting to self-manage. Who was she? Did she have a lot of properties in Montgomery, or?
She was just like me starting out. She lived in California and saw how cheap Montgomery, Alabama was. And then they just went over there and paid cash for a property. She just had one. It was her and like a business partner. They just had one. No other rentals anywhere else. She just wanted to try it out and just had a bad experience for her.
Wow.
So it was just, timing was perfect. She saw the check in the mail and she wanted like 20 grand more, but we negotiated. Cause I told her, I like to push the problems, and I don't want to sound like too bad on that, but we knew we're buying it sight unseen. I couldn't get in the property, so that I need to take a discount for that. I'm dealing with a troubled tenant. That's a big discount right there. So I'm telling her there's lawyer fees. There's going to be, and there was. I did pay a little bit to a lawyer just to draft me up a notice to vacate. I want to say it was like $200 or something. To draft me up a notice to vacate. To spend his time with me, to tell me how the process goes in Alabama and learn that, because that was my first almost eviction ever. I've never evicted before, never had to, luckily, knock on wood. Funny I say that, I'm actually going to be dealing with an eviction, possibly. I don't think it's going to end mutually good, but that's coming here today. I'll know a little later, but it was just solving her problem and solving her issue. So now she got 65 grand cash in her pocket. I don't remember what she bought the house for and how much she's in it. She may have lost a little bit of money, but now she's not dealing with this problem anymore, and she can move on to the next chapter of her life. So
she could have hired a property management company at that trouble point, and then started to tackle that instead of selling it. But she got so tired.
Exactly.
Yeah.
She could have handled it herself with the lawyer, or she could have, like you said, hired a property manager. But at that point, she's like, I'm just tired of spending money. I'm tired of dealing with this. It gave her a sour taste in her mouth. Real estate gave her a sour taste in her mouth. And I don't even think she'll invest ever again. We texted a little while ago, and it doesn't sound like she was interested in that anymore.
Yeah. No, that letter arrived at the right moment.
Exactly. And that's why, like my mentor says, like, just keep pushing the letters. They can be costly, but you never know when and what somebody's going through at what point in their time. I actually got a call a week or two ago from a check letter we sent out in November. So it's like, he was like, I received mine a while ago. I just thought about it now. So, it'll still play in, longer term. But going back to the list, my favorite list, the best producing, the most houses I bought from is for people that own in my market but do not live in my market. I bought just this year, end of last year, this year, I bought 3 just from people that lived out of state, and hopefully a couple more that I'm working on.
Awesome.
Because it's easier for them, if they do live there, it is easier for them to manage it, to tackle it, to be around it. So why not do somebody who doesn't live there? And I pull all my lists from Property Radar. If anybody wants to go through Property Radar, I can definitely show that right now. Property Radar is my #1 essential tool for real estate investing. Yes, that is my favorite and most essential tool to my business.
If it's send out postcards from that program.
Say it again.
You send out the postcards within Property Radar. It's all inclusive type deal.
No, I build the list from Property Radar. I make a CSV file and then transfer over. I use Yellow Letter HQ. They do birthday cards, postcards, check letters, anything you could think of. They do there. So you basically merge your list over to them. You take out all your, because some landlords have 6 houses, 10 houses. So you take out all of them and maybe focus on 1 or 2. Or you can send to every single one, but it's going to mail to each address. You put in your percentage that you want to. So sometimes I've sent for 80% just to get more calls, because of course the more money they see, they're going to call. I've sent for like 72. I've sent 70 is my kind of good number, because it's easier to work down from 70 than it is for 80. I'd like to be at 50 cents, 60 cents on the dollar, but 70% is kind of where you'll usually get those calls. And I'll show you guys Property Radar if you want to see. Has anybody used Property Radar before?
No.
Okay.
How much are you paying for those to use it monthly?
Property Radar is about 110, I want to say, a month.
Yeah, right around the going rate for most.
Yeah. Here, I'll share so you guys can see my list.
Have you used any other data search?
Can you guys see that?
Yeah.
Okay. Sorry, what was that, Troy?
I say, have you used any other software programs?
I have not. I'm pretty biased to Property Radar, honestly.
So this is kind of like your first one, or is recommended from you from just Jason, or?
Property Radar, I was actually on before, connecting with Jason, but he uses as well, and I've actually met the owner, been around them, and I'm just kind of biased to it.
Well, if it works for you, I don't see why not.
Yeah, exactly. So you can basically build your search criteria. Let's start from scratch.
There's a search for tire landlords.
Oh yeah, there's everything here. So if everybody can see, when building a list, this is how I build my list. So I will go to, so you can basically first things first, you can put in your area. So we'll do my home city for now. So then I type in my zip code, where this is going to do where I live. It'll pull up 21,255 records. And then here you can do quick lists. They actually did an update, but you can do all these quick lists right here. It'll tell you how many will be on the list that it'll build for you. I usually do quick lists and then investor on the left here. You could do absentee owner out of area. So you can go tired landlords. I like absentee owner out of area as well. So we'll just do that one. So
hey, Vincent,
yes.
I've wondered this for a while now, and I've tried to make heads or tails of it. What exactly does it mean, absentee owner?
There you go. And it tells you exactly right here.
I could barely read it. What is it?
Oh, sorry. It says one of the most popular investor lists of all time. Owners who do not reside in the property may be motivated sellers tired of dealing with tenants and other headaches of rental or vacation property. Owners that live out of the county are typically even more motivated, as they have to travel to deal with the property. So on their criteria here, it'll be not in the same county and not owner occupied. So their primary residence will not be in the same county as their investment residence.
So basically, I'd fall into that category because I'm not in the area. So to me, it's absentee owner, like it almost makes it sound like they don't want the property anymore, but it's not. That's not it. It just means they don't live. They're out of state. So.
Exactly. So you can do tired landlord, and then that will show who've owned for a long time and therefore more than likely tired of being landlords. So this will now say, so this criteria down here, if you can see it, are they owner occupied? No. The purchase date has to be before 2008. So that's just saying they've owned for a while.
That's like 20 years.
How much do you pay to use the Nader?
This one, I believe, is around 110. It's like 110 a month, I want to say.
So you just pay the flat that software fee, and then to grab the addresses from there, do they charge you extra by 100 or something, or?
No, so I'll pull that up in a second. They're extra fees. It's nothing major. So we'll pull up, I hate to do somebody's personal, whatever. We'll pull up this house here, 1415 Jamboree. So this is, so it'll tell you everything. So here's your owner right here. Can everybody see, or is it kind of small?
I can see it.
Okay. So here's going to give you your contact information. There's their first and last name. You can unlock the phone. They give you 250 free a month. I've never gone over that because when you pull the list, it's free. So we'll talk about that, but it'll tell you their phone. If it does have it, it'll have their email and any social. It usually says their employment, like what type of field that they're in. There's whoever else is on title that's probably the wife. And then you can talk, here's going to be about the property. So it tells the county, lot, land, all this stuff, lot square footage, the structure, property taxes, when they were paid. One of my favorite things is transactions. So this will tell you all of their loan information. So they bought in 2019. You can pull up their loan documents so you can see when they bought, you can see who the lender is, who the title company they went through, and who the seller was. And what type of purchase it was, whether it was auction, grant deed, whatever. You can see their loan amount. So it looks like, they may have got this home built. So they had a construction loan. They put down only a couple grand and they got a loan for $499,000. Then they refied out. You can see basically everything. Another good tool, value and equity. So this is what I use when comping. So if I'm looking at this property, I can come here, and this is the subject property. If you guys can see it right here, this is the one we're looking at. These are the comps that Property Radar will pull up. So you can uncheck or check anything close to this or not close, or different square footage, different bedrooms, things like that. So this one's it's right here. Jamboree Drive is the subject property. It's 3, 2.5. Number one's usually going to be the best matching. And you can see right here, match percentage, 97%. So it looks like the closest in square footage. It sold October of last year for $672. So that's a decent comp within 6 months. And it'll show just everything close by that sold. So I use this for comps a lot, this program. And then if I liked it, or if it fit my criteria, I don't look house by house. We kind of veered off from that. I build my list. So say we did, let's do tax delinquent. There we go. So in my county, so you'll see at this top bar right here, you'll see we're still in my county. This is all the criteria that we've searched. So we're still in my city. Sorry, not county. We're in my city. And then we did tax delinquent. And then here will be the number of people on that list. So I have 655 people in Fairfield, California, that are tax delinquent. So then I can make my list, and I can create a list for all these 655 people in this area. I transfer this list over to Yellow Letter and I mail to them. And it'll do 70% of the ARV of these houses. If that makes sense.
That's funny. I was just going to ask you what your percentages.
You've been holding out on us, Vincent. I was like, you can do a whole tutorial on just this.
Oh yeah,
Property Radar.
Property Radar, I feel is the most essential tool. I mean, I've used it for so much more than just real estate investing too. Like you can just learning about people's loan. Like if I get a lead come in, whether it's a PPL, mail, or whatever, I can figure out their story before I even really talk to them. The only thing I need to know from them is condition and motivation and timeline. Other than that, I know what you owe. I know who you are. I know where you live, like those kind of things. Unless it's like in a trust. There is some people that have it hidden. Like my stuff's decently hidden pretty well, or will be. So like there's ways to get around it. But yeah, you can find out so much information on, or it even helps with your offer. You're like, well, I can't offer that low because they owe 20 grand more than that. So I know that they're not going to take anything lower, so that's why I love Property Radar.
Vincent, what about liens? Does it disclose if they have liens on top of it?
Yeah. Let me see if I can find one.
How does it do in states that doesn't publish that information?
What do you mean? What would be?
Like Texas has,
Non-disclosure states.
Oh, I don't know. We can look that up. Let me look up. So liens. So yes, you can see. Let me try it again.
Try a zip
Missouri
code,
and Kansas
in
are non-disclosure states.
Texas.
Say it again, Liz.
If you guys can provide a zip code, then maybe he can look it up. Maybe there's
Yeah,
You can
and
look
I
at
found one with a lien
Kansas
here.
is a non-disclosure state.
So it will show. I'm gonna see how it shows. Transactions. Okay, so I'll share my screen again. This one has a lien. Share. All right, I am on my iPad. Okay, can everybody see this?
Yes.
Okay, so this one here has, this is their transaction information again. So when they purchased, all the way up to refis, everything they've done. But here at the bottom, you'll see a mechanics lien. So it looks like Roof Doctors, they haven't paid a bill with them for $456. So they show a now lien on the property. So actually, you know what? Let's do this. I will show you a house that I just bought with a lien. Actually, and you guys always know I will be transparent with everything I do and my numbers. And so this is a house I just bought from old Gary Cannon. He is the worst. So as you can see, he had a very eventful ownership of this property. Cash out refi loan. So house was inherited from mom and dad, I think. Gary is not the greatest homeowner in the world. So Gary takes a cash out refi, first position for $170,000, completely blows it, does not pay it. Then he decides to get solar and not pay that. So looks like he took another loan out for $250,000 in 2018. He just kept taking loans out and not paying them. Here's your notice of default and notice of sale. This was, so it was facing foreclosure. This one right here, he took second position. So this guy, Thomas Trust, right here, $175,000. He gave Gary $175,000 in second position, used the house as collateral. And I actually built a relationship with this guy, and he now wants to fund some of my deals. So he was foreclosing on Gary because he wasn't paying that second position. Well, I got up with Gary. I talked to the lender, the guy Thomas, and I said, "Hey, hold off. I'm buying this property. Don't foreclose on him. Here's my proof of funds. Here's everything you need. Don't foreclose." So his lien was his solar contract with Sunrun. They had a 30-something. It's not on here. They had a $33,000 lien on Gary. So in the proceeds of the sale, he had to pay that off. So we brought the property for $580 from Gary. I thought it would show the lien. I apologize. But I own that now. Yeah, okay. And then your other question was, what was the state you said?
try the zip code 75165.
I was gonna say Texas is a non-disclosure state. It's an easy one.
75165?
Yeah.
Okay. All right, let's just pick up one random address. Looks like it's doing it still has everything. There we go. Daniel Herrera owns, you can see everything. He bought it in 2017 on a short sale. So yeah, still nationwide, looks like.
Okay, thank you.
Yes, sir. Let me Does that help everybody? The deal review and kind of tools.
Hey Vincent, I'm gonna ask this real quick. I gotta get to my job, my work here. But hey, does it do multifamily?
Yes. Yes. Everything's same with multifamily.
Awesome.
And you can filter and you can filter 5 units. You can filter commercial. You can filter all that criteria. I actually have a list for some multifamily. So yeah, you can filter all that.
And commercial. That's awesome.
Yeah. Yep.
Thank you.
Yes, sir.
Does it have anything about rentals, income or anything like that?
No, it's going to be all home ownership. No, it'll show you market rents. It has an analyzer on there for you. I've never once used it. I do my own on that, but it'll show you market rents, kind of what your cash on cash could be. It has its own little calculator, but I've never touched it.
Vincent, what do you use for your rent calculator?
Ooh, that's a good question. So I use the HUD website, Section 8, when I that's just to know what Section 8 would give me. Affordable housing has its own calculator to where you can plug in your own address. So affordable housing is the program that the housing authority goes through to find these Section 8 tenants. So they go on there, they're all on there, and they apply to your property via affordable housing. They have your own calculator on there that will do up to a quarter mile away, or sorry, from a quarter mile away all the way up to the city. It'll show you like 4 different price points. And yeah, Lindsay just put that in. So affordable housing I use is one, HUD user, and then the biggest one and the easiest and free one is Zillow. I just see kind of what they're going for in the area. And then I only buy in 5 zip codes, so I know those zip codes already, and I know what I'm going to charge before even buying. So it's kind of 1, area knowledge. 2, the tools would be HUD users, affordable housing, and Zillow.
Same here. I use for my rent with the HUD user, and it's usually in my market, that's what baseline I could rent, and to regular tenants, I can rent a little bit higher than that.
Is it what the mortgage lenders use when they're like when you're, investing and they want to make sure that you can recover rent for this property being an investment property? What is their criteria? What do they use in order to come up with that figure to make sure that property will rent?
So that's going to depend on how you purchase it. So when I'm doing a BRRRR, all they want to see is a lease agreement signed, and to have that DSCR of 1%, whatever the DSCR ratio. So they just want a lease signed already. When I take it to refinance out. When you're purchasing it, they don't really care, because more than likely you're probably not going to have a tenant in place anyway. So it depends on how your purchase price, if that answers your how you're purchasing the house, if that answers your question.
So the mortgage lender, even though they're not protecting themselves to make sure, because of your debt to ratio, my understanding is they want to make sure that you're not having to cover that, and that market's going to allow for that. Because obviously they're not going to sell you a house at $500,000 and you can only get $1,000.
Correct.
Yeah. Because you're going to cover the rest of it. And if your income can't cover that, then they're not going to loan you that money.
Yes. And in my experience, I've never had, I'm not dealing with prices for my rentals that would, how do I explain this? Like the DTI isn't really a factor with these purchase prices. But I've never had them need a lease up front also, when purchasing. It's always been when refinancing out.
Oh, I'm not saying they need a lease up front. What I'm saying is, my understanding is they calculate. They go that there's some kind of thing to say, okay, this house is definitely available. They're not over.
They could rent for 25. Yeah.
Yeah.
They may do their own market research. I'm not sure how that plays out. Lindsay, do you know?
I just know in traditional conventional financing, like conventional loan, they have to look at your debt to income ratio, and that has to account for, let's say you don't get a rent there for 3, you have to be able to afford, like there needs to be just enough in your income to afford that house. Regardless, they're not going to count on your projected rent income. If you're getting a DSCR, then they're counting that projected rent rate. And then they'll use their own qualifications for that rent. And they'll use also like vacancy rates, for example, they may use like a 5% vacancy rate or like a 8% repair. Their own, like each bank has their own like criteria for calculating that 1.2 ratio for a DSCR.
When I talked to lender one the other day, they also wanted a reserve of like 2,500.
Yeah, my bank, when buying conventional, they want, when I'm buying a rental, my debt income still covers for that. And they want that reserves of at least 4 months in a savings account. Hope that answers your question.
Yeah, do they monitor that reserve? Is that something they make you set up with them?
No, they don't monitor. They ask you a statement of your savings
They're
account.
just ensuring, it's kind of like they're just ensuring you can make a down payment on a house. So they're just asking for verified funds. Thank you both.
No, thank you. That's good. Anybody have anything else? Any wins, losses, anything they want to share? Any questions?
Any new partnerships from the event?
Oh, yeah.
Just doing due diligence on those two property, that's 2 homes up on that property that I've got.
No updates?
I'm sorry?
No updates on those?
Oh no, I'm under contract.
Oh, good. Congratulations.
Yeah, so I went up there, looked at it. I'm gonna try to get them to go down another 15 grand. Because there's some stuff in the walls I just don't know about.
Yeah.
Yeah, so the roof's leaked for about 2 years.
Wow.
Yeah, so I can fix it all. It's just I want some more playroom.
Wow.
So, but the county's going to be really freaking easy to work with because it's not. I'm not used to that in California.
Yeah, exactly. No, that's good.
So hopefully it all works out. We'll find out in the next month.
Yeah, congratulations. That's big.
Thank you. But yeah, so I'm supposed to close on it. I think the 10th of March, and then we'll get in there and start turning it right away.
Nice. I did accept 3 nights ago an offer on one of my flips in Concord. So that's under contract now. So hopefully offloading that one soon, or we'll be offloading that one soon.
Close that deal.
Yes, I'm ready for that one to be done. So yeah, we got 2 more in the pipeline. And, oh yeah, and then Woodland Gym. So yesterday was key day. I gave them the week from Vegas just to get everything out. Then, mind you, the house I showed you guys, they're hoarders. They're not the best people with the best quality of life, I guess. They're just distressed and dealing with a lot. So I gave them the week. So Friday, we were supposed to be there 11:30, my crews and myself, and call her that morning. And she's like, yeah, perfect. 11:30 is good. We're ready for you. So I'm driving there. It's about 45 minutes for me. I'm driving there, and then 15 minutes before I get there, she goes, hey, we need more time. I said, I'm sorry. Like, no, like we're started. Like my guys are coming. We're starting. It doesn't, I'm actually okay with them waiting because we have another project going on right now. So I'm actually okay, but I can't let them know that, obviously. So she's like, I'll give $2,500, like just to stay over the weekend.
Okay.
Cool. All right, cool. I'll be there in 15 minutes. So I went up, showed up, picked up a check, and went right back home. So
there you go.
Yeah, they're in it another weekend. I don't mind. And yeah, they bought a motorhome. They're driving to Mississippi. There's just so much stuff there, and it's just disgusting. But I'm super excited for this project. It's going to be a really, really nice project. I'm still considering, that's who's actually texting right now. I'm still considering keeping this property and doing sober living, co-living, just because the house is 2,700 square feet. It can be made to a 4.2, but 4.3, but it's a 3.3 now. It's got an oversized 2-car garage that has a bathroom in it, which can be converted. And it has a 1,000 square foot shop on the property, which has a bathroom, which can be converted. And then it's on a half-acre corner lot. So it's already got plenty of room. It's just a perfect space I would rather keep it. I just got to figure out how I can cash flow from it, what method I'm going to use. So
have you talked to the county at all about whether they're going to allow anything like that?
I do have a guy that does sober living out here, and if anything, it'd be I own the house, he would do his sober living thing, and then we would just partner on that. So he would deal with all that stuff, but no, I have not yet. I have 2 guys that do it, so I'm kind of working with them, and then I'm looking into the co-living thing as well, just to see, because I want to keep it. Like I love that area, I love the house, but if it doesn't cash flow, I'm not keeping it. I'm just
right. Yeah, that's a number one problem I've always had is zoning, whether it's allowed to happen.
Mm-hmm. Yeah.
Where is this house?
Woodland, California. So it's right outside of Sacramento. It's a little smaller suburb. I wouldn't call it suburb. It's kind of more country or rural kind of, but it's in a downtown area. It's just a really nice neighborhood. Brick house. It's just beautiful.
Yolo County.
Yolo County. Yep. When you come up, Lindsay, you gotta tour the properties.
I have to, yeah.
Yeah. Awesome. Well, if nobody has anything, you got anything, Lindsay? Anything else?
No, I did see a deal on my market that is a good deal.
Yeah.
And it cash flows because it's just the lipstick rehab. So I'm gonna leave the address here just in case anybody's interested.
Yeah.
I'm not gonna pick it up because I have too much on my plate, but for my calculations, you can get like 14% cash on cash return.
Okay.
And then just doing like painting and fixing and maybe minor things. And it's in a great area. It's close to the Hard Rock Casino Hotel, and so.
And this is in Gary, right?
Yeah.
Okay.
And the thing that is one of the things that it says on the description, this is a motivated seller wants to sell ASAP. So you probably can. I don't think it's gonna last very long in MLS, and I think you probably can come under and
cash offer lower.
Fast, and you probably.
What is this rent for in the area?
This is gonna be 1,300 at least. Yeah.
Do you have anything close to here?
I don't, but I do want something closer to the casino area because I know it's a nicer area for sure.
Yeah, it's really not much. Some paint and flooring.
Yeah. Hardwood floors. Yeah.
Does everything have a basement out there?
Most properties.
Okay.
I think I only have one property that doesn't have a basement.
Really? And what kind of natural disasters is Indiana or Gary, Indiana?
Blizzard, so snow right now. If let's say this picture, I'm sure it was taken when it was no snowing, but it would be a good time to go check it out because it's been snowing a lot. And so if there's any moisture in the house, then you will be able to see your realtor will be able to check it out, your roof, your leaks, everything. So
yeah. Awesome.
Hey, I have a question for you guys.
Yeah.
So I thought about going keyless with my duplex. Do any of you guys do keyless entry for your doors?
No, I don't. No. I'm at a house. I mean, some of my houses are $40,000. So you're dealing with, not the greatest areas, to be honest. Some of my houses are 180,000, which is a good area, but no. The short answer, no. I wouldn't do that in my market.
Even the door code combination ones, because there's ones that you can change out the combination fairly easily with like a contractor or someone that can go over there. To me, it's like, having a bunch of floating keys run, it's, you can swap out a lock fairly easily, but it saves you $50, $160 per set,
Hey Troy, keep going. I have to just take this call real quick.
No problem. So I'm looking in terms of the effectiveness out of it. I mean, you could have a keyless entry where you can just change the code and then, bring in new tenants. And if, you don't have to worry about them losing a key. But, if you're having to evict them and change the code, then you can change the code again fairly easily. I'm just wondering what everybody else's opinion is.
Just change your batteries regularly.
Just change what?
Batteries.
Oh yeah, I've dealt with them for a long time actually on personal residences. That's something. Yes, you have to have the batteries changed out at least. I don't know. To me, it seemed like They could last year if you got good batteries. If you didn't have good batteries, then you're definitely thinking every 6 months.
Yeah, see, I like it as I'm going to do it every 6 months because then I have a reason to go check on the property.
Yeah, that is another really good reason too.
Yeah.
Which lock are you recommending?
I don't really. So I'm looking at Quickset. Quickset, like
okay.
they actually have it now to where like I've thought about putting internet in the property and having it built into the rent, and you can market it to where they pay additional just to have internet access. Or if they don't want it, then then they don't have access to the internet. But then I could easily remotely change the combination for the lock itself, or there are ones where you can actually just use an app, be next to the door handle, and then you can change the code.
And Lumberjack has them on every property, and what he does is he gives a tenant a credit for their internet.
Yeah. Okay. So how? Explain that to me, Jim. How does he give him a credit?
So he just gives a reduction in rent of $20, $30 to use the internet.
Oh.
Rather than doing his own setup and having everybody share off it, because you don't necessarily want everybody using that and whether they're going to be on it, so on and so forth.
So he makes the rent cheaper to have internet?
Yes, because that way I believe I need to verify it with him, but I believe every property he has electronic locks.
Yeah. See, that's
actually,
but I would think to charge more for the internet, but
no. But he's utilizing their internet.
Oh, their internet. I see.
And then give him a credit for partial of it.
Oh, I'll reach out to Matt about that. I'd like to learn about that more.
I might double check with him because I'm almost positive I heard it that way. And I don't know if he does it on all. That could have honestly been a short-term rental person. I don't know. It can't be. I don't remember. I heard it somewhere, and I thought it was from Matt.
I think he does. I think he uses the house brands at Home Depot. I think I did hear that. But
Defiant.
Yeah, Defiant. He does. Yeah, I have heard him mention that. I know Henry Washington and Felipe. They both use one that they sell on Amazon. It's like $35, and
I won't use Defiant.
yeah, gotcha. Yeah, but so yeah.
The only thing I can say about that is that you should contact Jared from the school because he recommends a particular one he uses for his co-living, that he also purchases the Wi-Fi for all of them because I guess it makes everything streamlined so you don't
see, that's what I was thinking.
Right.
Then you don't have to have disruption in service if they move
Right.
out.
And then you can troubleshoot it yourself versus, let's say, the tenant just pull out, started moving all the outlets around and then disconnected the
exactly.
And then now you have to work them out
guys
to figure it out, like reinstall software or whatever, reset or something.
Yeah, co-living and multifamily, that makes total sense. And then just increase that into the rent.
And I think Jared that he used many before that have failed, and then he finally found the one that he likes.
Awesome, Lindsay. I'll reach out to him. So I'm surprised I didn't talk to him when I saw him last weekend. But yeah, so I'll reach out to him about that. Thanks for reminding me. That's awesome because I have a short-term rental and we use one, but it's one that you have to stand by it and change the code and stuff like that. So but it would be nice to be able to, because we have a mesh system and I can watch the internet and I can reset it and do all the hardware reset and stuff like that as well. And that's one of the things you have to worry about. Or if the system drops, I get a notification.
Well, I'm gonna have to bail everybody. I'm going scuba diving.
Oh,
fun.
Okay, I will see you guys later.
Hey Jim, I'll get back to you about that commercial property too.
That commercial property is dead in the water. I can't.
Is it?
Yeah, I went over and looked at it. Can't turn around. It's nowhere near where they're lucky. They're going to get 80,000 for that. Yeah, it's a storage unit.
It's an interesting property because there's the Harley repair shop right next to it, but I couldn't find a good way to get into that. that would definitely make it interesting.
Well, there was a more interesting property right next door to 9 acres raw land that would really pique my interest, but I'm not ready for something like that because that could have been a huge multifamily development right there. But I don't have that kind of money or time right now, so. But okay, I'll talk to you guys later.
All right, bye.
Bye.
And then there were 9. No, just kidding. 8. Does anybody have any questions for this week's?
I don't have any off the top of my head. That was me.
Okay. I was just gonna say, I think this is a good place where we can wrap up today's call.
Sorry about that, you guys.
It's called being a real estate investor.
Y'all have a good one. Bye.
We enjoy having you. Hopefully you'll come back next week or tell your friends about it.
Okay.
Okay, I will see you guys next week, and this recording will be on school shortly, so let everybody know that you missed this.
You guys have a good week.
Bye.
See you guys.
Hey, where at on school are you reposting this? Because I know what Frank says.
On the special guest link.
Special guest.
What Singer put it on there. Mm-hmm.
Okay, all right, appreciate it. Thank you so much. Y'all have a great weekend.
You
Great
too.
show today. Thank you.
Thank you.
Bye-bye.